putting all of those numbers into perspective for us. Ghulam Zia, who's the Senior Executive Director at Knight Frank India, joins in to give us, an update on how things are looking. Ghulam, thanks for joining us. From your vantage point, how do you see things shape up right now? And which are the markets, which are sort of, what's the prognosis like in terms of markets that will evolve from here further?
Well, the focus, at least for us, something which was very stark is more than regions or markets. It's the segments of the market which are really very, very prominently visible today, and which means that the affordable segment of the housing is actually suffering. And for the first time in the history, we're watching that the luxury segment sales have overtaken affordable segment sales, and that's something which is the biggest input for me from the analysis that I look at. And that simply says that while upper end of the market is doing extremely well, at some point of time we will need to have a look at it or worry about the lower end not doing well, because this is one segment which used to contribute more than 50% to the sales pre-COVID state. And that's where, while the upper end and the mid end has been filling in the gap created by that segment, however, there will be a limit to how much of luxury apartments will you continue to sell. So overall, since most of our noted developers cater to mid to upper end of the segment, as you're just now showing, the results are good for all the developers. So net from residential side, while everything is looking good for the real estate developers, maybe in times to come, because of affordable housing not doing too well, we may have some concerns. Back to you.
All right. And what about, pricing? Do you think if the pricing goes higher from here, it could impact demand at some point?
Of course. Affordability continues to remain a concern, and that's exactly the reason why the lower end of the market is suffering, because the increasing home loan interest rates have had severe impact on the lower end of the market, while mid to upper end is not so much dependent on the home loans alone, but the lower end is already showing the concerns. And that's where it is. Like if the home prices also continue to inch up the way you're talking about, the affordability will be a big concern, and that can have an impact on the sales velocity. Mind you, currently the sales velocity is perhaps the best. While I'm sure the next question that most of us will talk about is the inventory. While the inventory is increasing, but at the same time, sales velocities are shooting much better than inventory level. So overall, there is no concern except for what you're talking about. If the price rises are way beyond expectation or affordability, we will have a concern. However, currently the price also is not rising as much, because most of the products are in premium segment. The price rise for a few good products and a few developers is good, maybe about in double-digit numbers. But then otherwise, a 5 to 7% of a price rise is not so much of a concern currently. But going forward, it remains to be seen how long developers continue to absorb or not get overawed and start taking the prices up.
All right. What about markets like Bengaluru, right? I mean, just trying to understand, if you look at the sales, the momentum has sort of waned a little bit in the last couple of quarters. And as you said, right, affordability is becoming a bit of a concern. But at the same time, there is so much supply that's coming up. We were talking to Brigade a while back, and they have a couple of new projects in Bengaluru. There is rapid urbanization. One visit to Bangalore and you'll understand what's happening there with traffic, etc. Do you think this, on one hand, affordability being a concern, on the other hand, oversupply being an issue, do you think pricing will suffer over the next couple of months, specifically in Bangalore?
Well, specifically focusing on Bangalore, let me also remind you what I just spoke about. The affordable segment, which was a sizable chunk in Bangalore market, has been suffering. However, the mid to upper end of the sales in Bangalore are also rapidly going up, which means that the concern area, once again, even for Bangalore, is the lower end of the lower segment of the market. And that's where the impact is felt a lot. And especially for Bangalore, since we're talking about it, because it's also mostly the demand comes from the IT/ITES sector, and that's where the office new job creation was a bit of on a slower side, because the office absorption in Bangalore was not the best, and that's where over a period of time the impact on the home sales is also visible. However, as I said earlier, even in the case of Bangalore, the focus area shall continue to be the lower end of the market, and because of that, since you're talking about ultimately the inventory, well, inventory also is not a problem. As I maintain, even if you have an inventory of more than about 8 to 9 quarters of sales, that now connecting it to the velocity of sales, if whatever you have can be absorbed in less than 2 years, it is not a worry at all. In fact, I would rather want to have more inventory coming in the market. And all of that ultimately connecting to price. Even now, we don't really see much of a concern as far as prices in Bangalore are concerned. It's going to be pretty stable for some time to come. Only if the prices are shooting up by about 8-10% year on year, will we have a problem, which we don't really see much of a possibility at the moment.
All right, Ghulam, always a pleasure speaking with you. Thank you for joining in with that perspective. Hope to speak to you soon again on the same itself. Take a short break, come back on the other side.